Corporate fraud and embezzlement are extremely common. Here's a perfect example in a case from Oregon where a bookkeeper for a landscaping company stole over $500,000 from their employer. And there was a lot of red flags that could have been observed. They were posting all kinds of high-end purchases and lifestyle choices on Instagram. The person was a very long-term employee. You'll see that a lot of the red flags for fraud were there. For example, they were claiming to have tens of thousands, if not hundreds of thousands, in equestrian gear on a regular salary. This nursery was a victim of $500,000 since 2015, and it put significant financial pressure on their company. And as we'll see in the following examples, there's a lot of opportunities where they could have been observed. There was not cross-references to accounts. A lot of the checks that were written and deposited to entities other than what was showing on the financial statements. You can use QuickBooks or other high-end accounting software, bookkeeping software, to obscure the true payees on checks and deposits. You can see on the little slideshow of how QuickBooks can be used to change checking information and deposit information, and a good bookkeeper can do this if there's not second observation of checking accounts, bank statements to verify who the checks went to. This can go on. This went on for 4 years, and usually common elements for fraud, or it's a trusted employee. There are some facts about fraud which any business probably should take a look at. First of all, half almost of business failures result from embezzlement. They say 30 to 50% result from embezzlement. Most thieves, this is the first time. They don't have a track record of stealing or embezzlement or fraud. So it may be a trusted employee and somebody who has good references. The average scheme for fraud is 2 to 5 years, and this last case matches that perfectly at 4 years. Usually their loss is more than $100,000, and the average loss is over $1 million. Most employees who commit fraud have been in the company for 5 years. There is a reverse correlation between the fraud and how long they've been there. People who have been there longer generally steal more. Short-term employees generally steal less. So you might want to look at long-term trusted employees to make sure they don't have that opportunity, because usually they're good people. They just run into an opportunity. The average pay for an embezzlement employee is $16 to $25 an hour. A thief or a fraudster can take 3 to 5% of revenue without being caught. So think about your corporate profit margin. If it's a 8 or 9 or 10% margin, half of your net profit can go to a fraudster if not caught. Usually they steal cash, but sometimes it's checks, incoming checks, maybe insurance payments, and usually the identifiable ones are deposits and payables. In another case, an IT executive stole $6 million from their employer. And you'll see on the complaint that the Department of Justice filed that this person used some very common techniques. Here's the complaint against the defendant and the recitals of their job description. It says that from August 2015 through 2019, this company submitted approximately 52 invoices. These invoices were submitted in Word document format, and the metadata identified Kabaj, who is the defendant, as the author, meaning that the person who submitted invoices to the company for payment was actually an employee of the company with a fake company name for a vendor. And they collected over $6 million. It identifies the employee as a senior manager, and he's been in charge of data centers. He submitted invoices for hardware for the data center that seems like it would be stuff that the company would buy, but in fact he was using an EIN number for his own company. Employee one further stated that the company is unlikely to have purchased the manufacturer's servers as described. Once it was investigated, it turns out that the employee of the company, who was a legitimate employee, found out that this was not something that normally would have happened. Keep in mind that all of the people referenced in this video, they're charged, they're not convicted. It's alleged that these crimes happen, but this is an example of what type of investigations have. And here's one payment of $548,000 by the company. So as corporate fraud is an element that can affect your business, it's very simple to look at very easy cross references to make sure that the checks going out are legitimate, the companies they're going to are correct. And there are things you can do for spend an hour or two a month, or some very simple software tools to identify potential fraud, potential embezzlement before it results in having to lay off employees, maybe cut back on advertising, or have to close your company because of losses.